All right, welcome everybody. Welcome to tax season for entrepreneurs. This is one of our new learning engagements with Vinegar Hill magazine. And I have a good friend, um, myself, on here tonight, um, Miss Akia. So Akia is here, Akia Ward, and you see the credentials by the name. It says CPA. And we just want to make sure that we're giving out good information. And I'll read Kia's bio, but I want to make sure that I let you know that Kia actually has helped me, and my enterprises and all my serial enterprises, and to make sure that I'm on point. But I want to get into the bio, and then I don't want to, take a lot of time to talk, but just want to make sure you know that this is, being sponsored by Vinegar Hill Magazine. And we have Kia Ward from Avp Financials here today. A little bit about Kia. Akia V. Ward is a CPA and has 8 years of corporate accounting experience, business planning, and budgeting experience. She received her undergraduate degree from the University of Tennessee at Knoxville, as well as a master's in business administration with a finance concentration and a master's of science in accounting from Strayer University. Akia is the owner of Avp Financials, a small business and accounting tax firm focused on providing expertise to small business owners. And I'm just excited about today, and I'm looking forward to what Akia has to share with us. I see we got a few more people trickling in, so we'll let them trickle in. But go ahead, introduce yourself and take us away, because I want to make good use of time, because I'm sure that people will have questions, and want to make sure that if you have questions, you can enter it in the chat. So we're streaming live on both YouTube and Facebook. And if you have questions, you can put it in the chat. We're going to hold questions until the end, but if you put it in the chat, I will notice them, and we will, take a look at them after Akia finishes the presentation. My hope is that we'll get more people in, but we're going to make this available after. But the thing is, today is free, but it's possible that yesterday's price will not be tomorrow's price. So y'all want to make sure, if you got friends that need to get this valuable information, you need to send them a link, share it with them, and tell them come now, because yesterday's price will not be today's price. So with that said, I'm going to turn it over to Akia to get us started.
Awesome. Well, thank you so much for that very, very warm welcome. Again, my name is Kia Ward. I've been CPA for quite some time now. As you mentioned, graduated from University of Tennessee. I am originally from Memphis, Tennessee. If you hear any accent in my voice, just bear with me. I am loud and proud about it. But I recently moved to the Dallas, Texas area with my husband and our 10-year-old son. I started Avp Financials because I'm very passionate about changing the narrative when it comes to tax literacy and also financial literacy. I don't feel like my story is too unique, because many of us have grown up in a world where our parents didn't understand money, our parents didn't understand taxes, and just that lack of knowledge and bad habits just kind of passed down from generation to generation. So my goal is to stop that. And I want to do that by educating business owners and breaking things down in the way that can be easily understood. So in today's session, we're going to go over the tax side of things. That's where we're going to focus on to get you ready as business owners for the current tax season, and also so you can set yourselves up for future success. So I'm going to share my screen so we can jump right into it. All right, thumbs up if you can see my screen.
Go ahead and hit that like button. All y'all out there, hit that like button. We can see it.
Excellent, excellent. All right, so let's just dive into the agenda real quick. So we'll go over a few basics about taxes. We'll dive into what will need to be done throughout the year in order to prepare to file your taxes, and also what needs to be done during actual crunch time, tax time. We'll go over some commonly missed tax deductions. Now, this is the big one here because I get asked questions about this a lot. Last but not least, we'll dive into some myths, my favorite myths about taxes, and then we'll open up the floor for questioning. Again, we may not be able to get to everyone's question, so feel free to drop your question in the comment box below. I do want to provide a disclaimer that this webinar is for informational purposes only. It's not meant to take place of any legal or professional advice. So even though I am a CPA, I am not your CPA. So anything specific to you and your business, definitely I'll provide my contact information at the end of this presentation, so you'll be able to reach out to me then. But let's go ahead and jump into Tax 101. All right, so this meme I found on social media, and it has become one of my most favorite memes. Looking at it, it seems almost laughable, but it's actually very true. Like, just the mere thought of taxes alone can be overwhelming, and it seems like Uncle Sam is setting us up for failure by trying to have us operate on the honor system. And that honor system is the government trusting you to report everything exactly as it should be. But if you make a mistake, depending on the level of mistake or severity of that mistake and the intention behind it, you could very literally end up being fined or thrown in jail. And I did a little research here. This is also a quick pre-myth before we even get to that section. If you look up the IRS, how long the IRS code is, or the Internal Revenue Code, you'll come up with all type of crazy answers. Like if you Google right now, you'll see 75,000 pages, you'll see 40,000 pages, but in all actuality, it comes up to be right under 7,000 pages, but the majority of it is fluff. So the usable information is around 2,000 to 3,000 pages, but that is still longer than any normal person wants to read. The wording of the Internal Revenue Code is very old and very cryptic, and it seems like a scavenger hunt. One section refers you to another section, which refers you to another section of the code. So it just leaves everyone in confusion and letting the tax code still be a mystery to everyone. So we're going to break things down and start organizing ourselves in a way that makes sense. We'll break it down bit by bit so we can know enough to be dangerous and, get our taxes in order, because tax is a game of strategy, and you begin to play that when you start organizing and operating your business as a business. So in order to do that, you have to know your numbers. But before your numbers, we're going to jump into some dates that are very imperative to know for tax season here. All right, so the first date we see here is January 31st. And though this January 31st date has already passed, this is the date where W-2s and 1099s are to be filed to the IRS, the state if applicable, and then also provided to the recipients of these documents. So we as small business owners sometimes pay other small businesses who are individuals or who are single member LLCs. We pay them, via, I'll go over some details about that a little bit later, but we owe them a 1099, and that information is due January 31st. The next one we see here is March 15th. This one is a major key, especially for a lot of small businesses who want to become taxed as an S corporation. One thing to remember is that your tax return is due a month earlier than everybody else's. So you lose a month of time, which means your ducks need to be in a row earlier. So keep that in mind. As corporations, partnerships. And the reason why is because you would need to be provided what's called a Form K-1. A K-1 is very similar to a 1099 or a W-2 in that it just has the partner's share of the profit or loss from the business for that year. And then they'll take that and report it on their personal tax returns. The next date we have here, April 15th. Because April 15th falls on a holiday this year, the actual tax due date is April 18th. So you'll see the asterisk there. But all individual tax returns are due. Sole proprietors and single member LLCs, all of their information is filed on the individual tax return. So they have the exact same due date. Another area that you see here with an asterisk is the extension. So I want to be very clear on extensions. Filing an extension only allows you more time to file the actual paperwork. But if you owe Uncle Sam, it does not give you more time to pay. So it's kind of backwards in that you haven't filed yet, so you don't know what you owe. But Sam still expects you to pay by this April 18th date. There's no way around that. If you don't pay and you owe something by that date, then you'll be hit with interest and penalties. So get everything done on time. You don't want to procrastinate. However, if you do need that extra time to file your taxes, then you have until October 17th after you have successfully filed an extension. So keep that in mind. We're going to move on here to what you need to do to prepare throughout the year to get ready for those due dates. And to organize and operate your business as a business, you definitely need to have some systems in place to help ensure things run smoothly. The first of which is to open a separate bank account for your business. Now, I've come to realize that my reputation precedes me when it comes to this first step. If you are a client of mine or someone who has watched my handful of YouTube videos and reels, then you are fully aware of my stance on commingling funds. I am fully against it. I'm allergic to it. It's against my religion, and I don't condone it in any way. So treat your business like a business. You will not see Jeff Bezos, you will not see Warren Buffett or any other savvy business owner buying personal items on their business cards. Everything is separate. So change your mindset when it comes to running your business. Treat it like a business. If you keep treating your business like something that's small, something that's an afterthought, then that's where your business is going to stay. So change your mindset, make it happen. Open the separate business account. For everyone on this phone call, if you have not done that already, please know that this is your homework. Please know that I will follow up. All right. Second system to have in place is accounting software. I do get a lot of objections that accounting software is expensive. However, please note that there are free accounting softwares. Wave Apps is one of them, and it's an excellent product. They do have other things to pay for, such as like payroll and things of that nature, but the basic accounting system itself is completely free. And if you are someone who is adverse to using accounting softwares, then having a simple spreadsheet in place in Microsoft Excel or Google Sheets is going to be viable for you as well. Just some type of system to organize yourself with the money that you have coming in and the money that you have coming out so you can categorize those things. It's going to be even more so important. I wanted to bring this up for clients who have customers to where you need to provide them invoices for your services. That accounting software is going to let you see which of your clients owes you money, which one of your customers owes you money, how long they have owed you money, and it's just going to kind of help you determine if you need to take any further action to receive your money. So this is accounts receivable, and a lot of large corporations have problems with this, but you as a small business owner, and I'm going to include myself in there, we can't afford to have accounts receivables issues. So if you're organized, then those things will be at the forefront of your mind and are less likely to slip past you to where you've done service for someone or provided a product for them and they have not paid you. So there's that. The third system to have in place is receipt and document organization. For some reason, it is difficult for business owners to keep up with receipts. I am as allergic to paper receipts as I am to commingling funds with these accounts here. So I recommend digital organization, cloud folders such as Microsoft OneDrive, Google Drive, iCloud Drive. All of those are great examples of how you can organize your receipts in a cloud. We're going to come back a little bit later to document organization as it relates to expenses. On this slide here, we have some things. This is continuing with what you can do throughout the year to prepare for taxes, but more so on a granular level on a monthly basis, categorizing every dollar that comes in and every dollar that goes out. It is so stressful to have things pile up on you at the end of the year to where now you have to organize 12 months of data. So I recommend doing that on a monthly basis to where it's manageable. You understood the money that came in, you know where it's coming from. The money that's coming out, you remember what it's for because you have also digitally saved the receipts for everything. So doing it on a monthly basis is just going to be the best bet, best piece of advice that I can offer on this. The third bullet that we have here, reconciling your business accounts. This is important because you want to make sure that you have captured everything that has happened for the entire month. A lot of accounting softwares will allow you to sync your bank account to where it'll automatically pull in the transactions, but you do want to still look at your actual bank account, your bank statement, and just kind of do a double check. Is everything that's on my bank statement in my accounting software? Because you don't want to miss anything. That's how you end up missing out on deductions, and we don't want that. Fourth bullet here, prepare financial statements. I can't tell you how many times I've had conversations with business owners who don't know what financial statements are. And that's a huge thing. They are the lifeline of your business. It's the status report of what's going on. So run your financial statements every month. It's so much easier to do with accounting software. For a couple of clicks of a button, you can have a report in front of you that will summarize all of the income that you have coming in, all of the expenses and the different categories that they relate to, and what's called the bottom line of your business. So all of your revenue minus all of your expenses equals your net profit or your net loss if your expenses happen to be greater than your revenue. This fifth bullet here, update business logs. We're going to get into that a little bit later as we discuss commonly missed deductions. All right, so jumping into what do we need to do? It is now tax time. We are in the thick of things. Hopefully we have gone through the year doing everything that we needed to do to get ready for this point in time. So the top 3 items for tax season for entrepreneurs, with a strong emphasis on the first and second item. You'll recall earlier that the 1099 has a due date of January 31st. So that form is something that you, the business owner, are responsible for filing early in the tax year. It's one of the first things that you're going to do. The second area, Schedule C. This is the form for all sole proprietors and single member LLCs to use to report their profit or loss for their business. S corporations, and an S corporation is not an entity in and of itself. An S corporation is an LLC who has elected to be taxed as an S corporation. So an S corp is an election, but they file on a different form called the 1120S. It has many of the same components as the Schedule C. So for today's webinar purposes, we're going to stick to the meat and potatoes of the Schedule C. Third option here, other tax forms. They're definitely needed to round out our tax filing process since we are more than just our businesses. Many of us work for other businesses as employees. We have interest-bearing savings accounts to where we'll receive tax forms from them. We own stocks that pay dividends and we'll receive tax forms for that as well that will need to be included on our individual tax return. So let's jump into the 1099s, the first thing on your checklist to do as an entrepreneur. So this, what you see here, is a screenshot of the 1099 NEC. Now, NEC stands for non-employee compensation. Previously, the 1099 miscellaneous, or MISC, is the form that most contractors would have received for services to a business. However, one tiny box on that form, box 7, was moved to this form by itself for non-employee compensation. So there's a few checklist items here to determine who is going to get a 1099 NEC. And the first of which is the people that you're paying cannot be your employees, because employees get W-2s. So contractors that you're paying to do work for you, if they don't work for you as an employee, meaning you don't pay payroll taxes for them, you don't provide them a regular paycheck, this is the form that they're going to get. The second threshold here is for the amount, $600. So you would have had to pay them $600 or more throughout the year, and the payment method matters as well. So this is where a lot of people are safe, because if you are paying with a card, either a debit card or a credit card or a third party like payment merchant like PayPal or Stripe, then those payments don't qualify or don't obligate you as the business owner to provide someone a 1099. However, if you are paying someone with cash, which I don't recommend, because cash is not a paper trail, and for business purposes, you want a paper trail. So unless you pay with cash, a check, and a physical check or an electronic check, ACH, or something like Zelle. Zelle is not considered a payment merchant. If you pay by any of those methods, and again, it's $600 or more to someone who is not your employee and someone who is not taxed as an S corporation or a corporation in general, then you owe them a 1099, and it was due by January 31st. For those of you on this call who have not filed 1099s, and you just discovered on this call, you were today years old right now, realize that you need to file a 1099 for someone, I would go ahead and get that taken care of. Though there are penalties for filing late on that, it is very hard for the IRS to impose those penalties. But at the end of the day, it is still your obligation to get it filed. So get it filed. We're going to move on here. Excuse me. We're going to move on here to Schedule C. So Schedule C, this is the meat and potatoes of what we're working towards as business owners. This form, it looks overwhelming, but it's just broken down into two parts here. You have part 1 for your income, and you have part 2 for your expenses. And we spend literally our entire year trying to prepare to file this one form. This sums up all of our business operations throughout the year, and helps us to categorize what has happened throughout the year. And if you begin kind of with the end in mind, it's going to help you have your business numbers flow a little bit more smoothly into this form when it comes time to file it. So we're going to dive deeper into each part of this Schedule C, starting with part 1. So this income section, you'll see it's very small, so it's nothing to be afraid of. The sales of services, if you are service-based business like myself, I don't sell any products. So all of my services, sales from that is going to go on line 1. For any person that I have to provide a refund to, or discounts that I have provided on my services, all of that's going to go on line 2. For those of you who sell products, it's a bit different for you, as you'll have to calculate your cost of goods sold. And that calculation is actually on page 2 of Schedule C. And we won't be diving into this during this presentation, as the topic of inventory is a little bit more, it's bigger. It can have a session of its own. So we're just not going to dive into that in today's webinar. But feel free, Google Schedule C, pull it up, download that form from the IRS and look at page 2, and you'll see the cost of goods section and what you need to do in order to put the correct number on your Schedule C. All right, so going back here, line 6, you'll see other income. Now, other income is income that is not in the course of your regular trade or business. So this could be something as receiving a grant from SBA. A lot of small business owners received grants, especially in the wake of, COVID. So that's not your regular business to receive grants from the SBA. It's not a business. So you want to put it on the other income line. So all of that income total up, that's going to be your gross income. Moving into expenses. This is a larger section here. And I want to spend some time focusing on this because, again, I get asked a lot of questions about expenses, what people are missing out on. So let's walk through a few of these, and I can give you examples of what falls in these categories. And this is something that you can try to track yourself throughout the year. 2022, we are, tomorrow is March. So if you haven't tracked things the way that they need to be, you can definitely go back and take care of January, February, and then start March off on the right foot. So some common lines that have expenses in this expenses area is definitely line 8 for advertising. Any type of Google ads that you're doing, anything that you're doing to promote your business. I use Canva and I pay for the pro version of Canva. I use that to schedule out social media posts. All of that is advertising for my business. Line 9 for car and truck expenses. We're going to speak a little bit more on this later in the presentation because it is a bit involved, but this is a common line that I see filled out on the Schedule C. Line 11 for contract labor. This is where a lot of your expenses for the people that you need to provide 1099s for, this is where that is going to be. Now, you technically don't have to put expenses in this contract labor line because if they fall into another category or make sense to go there, then you can do that. But again, if you are filing 1099s for people, 9 times out of 10, the expenses that you have paid to them is going to go in this line under contract labor. I hardly see anything under depletion as we don't have things to deplete as small business owners usually. So I'm going to jump down to insurance, line 15. So it says other than health. So that is your professional liability insurance that many of us have as business owners, your errors and omissions insurance, things of that nature. For legal and professional services, accounting fees that are incurred, fees that you have to pay to establish your business. Like if you have an LLC, then it's likely that you paid a fee to the Secretary of State to even have your business name. Annual filing fees to the Secretary of State just to keep your business in good standing. All of those things are going to fall under legal and professional services. We're going to jump over to the second column here for office expenses. Now, office expenses is a really broad category, and it's pens, paper, postage fees, staplers, ink. A lot of things are included in there, but pretty much if you're sitting in your office, look around, the majority of the things are going to fall in there. Like I have a Post-it note. This would be office expenses. Ink pen, office expenses. Random sheets of paper, office expenses. Going down a little bit further, line 20 and 21, so rent and repairs and maintenance. This is most common for businesses that actually have a physical location, a separate physical location, but it can also encompass renting and repairs and maintenance on office equipment. So if you have like a huge printer and it broke down and you paid somebody to come over and fix it for you, then this will fall under that category. For taxes and licenses, business licenses, most of us have business licenses. I am a CPA, and a CPA is a license that I have. I pay to renew it every so often. So the fees for that are going to fall under this category. If you are in a state that charges like franchise or excise taxes, that is an annual fee, depending on your state, and it depends on the amount of money that your business made for the excise taxes. But whatever you have paid, you can write it off as a deduction on that line for taxes and licenses. And then also any local or state sales tax. If you are someone who sells products, you can write it off on this line as well. All right, travels and meals. This is one of my favorites because I love to travel and I love food. I'm from Memphis, so you already know I love barbecue. So, travel and meals. This includes like flights, rental cars, ride sharing costs, such as like Uber and Lyft, hotels, Airbnb, like meals while traveling. So much is included here. I'm going to touch on this a little bit later because it is a lot to unpack here, but this is the big deduction. So if you are thinking back to yourself, hey, well, I did take that trip, write down where you're going, get your receipts in order. Okay. And right now, actually, with the hard hit that the restaurant industry had on COVID, meals is actually 100% deductible for this particular tax year, 2021, and for 2022, whereas previously it was only 50% deductible. So, what that means is if you're going out to eat with your clients, if you're going out to eat with colleagues for business purposes, then you want to be able to track that so you can have that benefit on your tax return. Still, it cannot be like lavish or extravagant. There are still some caveats that you need to take heed to when trying to deduct these from your tax return, and your accountant or your CPA or your tax preparer should be mentioning these things to you, just to keep you in compliance. So there is that. Going down here, we have utilities. So utilities, this can include like the actual utilities for your separate physical location, as well as the cost of your business phone if you have a separate one. Now, I want to be very clear on this because I've come across this as well. If you have one phone that you use for business purposes and personal purposes, there is no way you cannot, it is very black and white, you cannot write off 100% of the cost of that one phone as a business expense. Why? Because you use it for personal time as well. So you can come up with your best estimate of the percentage of time that you use that phone for business, and it is that amount that you'll be able to write off. But again, you cannot write off 100% of that if you only have that one phone and you are using it for both business and personal. This last line here, 27A, this is like this is a catch-all for everything that else that you have spent money on as a business that does not fall into any of the other categories that you see here. An example would be like a laptop for your business. You can put it in other expenses. Training for like an industry event or something like that, you can put all of that under other expenses. I expect to see some questions here about the other expenses a little bit later on. I do get asked about that a lot, but again, anything that does not fall into the other categories that you have on here, more than likely going to fall into other expenses unless it is just something that is not deductible whatsoever. All right, so other tax forms. Again, we are not just our business, so there are other things that we need in order to file our taxes. If you work for someone else as an employee, then you're going to be waiting on your W-2, which by now you should have already received. If you are someone who does work for other businesses and you are not an employee for them, and you are also not electing to be taxed as an S corporation, and they paid you in the methods that are applicable, then you would have received a 1099 NEC from them. The 1099 INT And the 1099 DIV or DIV, this is for interest and for dividends. So interest on savings accounts, as low as interest rates are right now, nobody's making any money on savings accounts. But the few dollars that you did make in interest, you should have been receiving a 1099 INT from your banking institution. The 1099 div, you would have received that from wherever you hold your dividend paying stocks. Robinhood is an example of that. You would have received a document from them electronically to where you can log into your account and get it. The 1098 is for mortgage interest. And even if you don't itemize on your tax return, if you are someone who has a home office, you definitely want to be giving your accountant your 1098 form for mortgage interest, because that is something that can be written off on your tax return based on the percentage of space that your office takes up in your home. Going down further, we have 1098T, 1098E. This is for students. So if you are a student and you have gone to college, paid fees and whatnot, you would have received the 1098T. If you have paid on your student loans, now this is an interesting one, because while we have been just enduring this pandemic, the student loan repayment has been frozen and no student loans are accruing interest right now. But if you were one of the few people who were making payments or continuing to make payments during this time, it's very likely that you would have paid student loan interest. So this 1098T 1098E should be available to you. You can go on to your loan service provider's website and download that. There is a tax deduction of up to $2,500 for student loan interest. However, there are caveats with that as well, just as with everything Uncle Sam tries to, give us and take it away. It depends on your income. If you make too much money, you won't get a deduction, but grab that form and let your tax accountant figure that out for you. All right, this last one here is new for this year, letter 6475 and letter 6419. This is for the economic impact payment number 3. This letter is so important because if you received the stimulus check for the third amount, there is no recovery rebate credit that you need to claim. If you did receive it, but it wasn't the correct amount, then you can claim the recovery rebate credit. If you didn't receive it at all and were supposed to, then you can claim the credit on your tax return. 6419, letter 6419 for advanced child tax credit. Now, this one is going to trip a lot of people up this year, unfortunately, so don't let it be you. But for those who are used to getting like this huge tax refund because of the child tax credit, if Uncle Sam has already given you half of the credit throughout the year, don't expect a large refund, and don't be, kind of shocked when your refund is smaller than what you would have expected to be, because you already received it throughout the year. But that form is very important because the same reasons. If you received not enough of the credit or too much of the credit, all of that is going to be reconciled on your tax return. All right, so we're going to move into like a favorite section of mine, commonly missed tax deductions. So these are the top 3 commonly missed tax deductions in my opinion. And the biggest reason for these deductions being missed is actually, it's so simple. It's just due to lack of tracking, not rocket science or anything of that nature, just tracking. It could be a combination also of laziness, time management, poor organizational skills, or just disinterest in shielding their money from Uncle Sam. But whatever the case may be, these deductions should definitely be a priority for business owners, because they can be worth up to thousands of dollars in tax deductions. So let's hop into the first one here, business use of your vehicle. So again, in order to take this deduction, you must track your mileage. There is no way around it. There are apps out there that will do the tracking for you if you hook it up to your or set the settings on your phone to allow it to always know your location. QuickBooks is one of those. QuickBooks has a mileage tracking module within its app. You'll just need to go through every day or on a weekly basis to determine the trip that you took. Was it for business or was it personal? And if it was business, then what was the business reason that you took that trip? It could have been you, something as simple as going to Target. You went to Target to buy a stapler for your business. That mileage is something that you should track and something that you would be able to write off. And yes, you can write off the round trip to Target, from Target back to your house. But we won't know unless you track these things. The standard mileage rate method is one of the methods that you can use to write off the business use of your vehicle. The actual expenses method is another one. Uh, what method is going to be most beneficial for you definitely depends on a case by case scenario. Maybe you are someone who doesn't drive much at all, doesn't have many expenses for your vehicle, such as like repairs. You have a very low insurance rate, so it may be more beneficial for you to take the standard mileage rate. Or could be the opposite. Your vehicle, has a lot of costs associated with it, and just taking a percentage of that is going to be more beneficial for you than the standard mileage rate. But whatever the case may be, again, you have to track your mileage. So this is where the mindset shift comes into place as well. If you just change your mind and don't say, oh, tracking mileage is difficult. Tracking mileage is easy. Just track it, get the deductions. Your pockets will thank you later. But you'll take this deduction on Schedule C if you're using standard mileage rate. If you need to take the actual expenses method, you'll use Form 4562. And in the keeping time in mind here, I'm going to move a little bit faster towards these last slides so I can open up the floor for questions a little bit later. But business travel, I spoke about this one earlier. These are the things that you need to track for business travel. And it's basically the logistics of things, and also the who, what, when, where, why. So when did you go on this business trip? Where did you go? Who did you go with? Or who were you meeting there? Why did you go? What was the nature of this business? How much did you pay? And the how is, did you get there? Did you fly? Did you take a bus? Did you take a train? Did you take public transportation when you got there? Did you order a private limo? Mm-hmm. Did you stay at a hotel, Airbnb, a friend's home, things of that nature? So you want to track all of that. And then for documentation, you also want to keep proof of your payment of all of these things so that you'll be able to easily transfer all of these expenses onto your Schedule C. So tracking is very, very, very key. All right, business meals. As mentioned earlier, business meals are now 100% deductible. So we want to do everything within our power to make sure that we are substantiating everything by having all of our records organized and ready to go should Uncle Sam ever come knocking on your door and ask you about anything that you have spent your money on. You can easily go back through your records, find that one receipt, find your log that has all of the information or the answers to the question that Uncle Sam would ask in an audit. But those questions would be, when did you go have that meal? Where did you have that meal? Who were you having that meal with? Point of clarification, you cannot deduct a business meal that you are having with yourself. Not possible. If it's just you and only you, sure, you can talk about business to yourself and you might even respond to yourself, but it's still just you. You cannot write that off. You have to be with someone, either a client, potential client, business colleague, anyone other than just yourself. The nature of that business, you want to document that as well. It could be as simple as trying to, onboard a new client, trying to get a potential client to become a client, or learning best practices from someone else who is in the industry. Anything could be a business reason for you to have that meal with that person. Tracking the amount, you want to keep that. That'll all be on your receipt as well. Take a picture of that, organize that receipt in a cloud-based storage folder. One thing I want to talk about here, you'll see in the middle under documentation, per diem. This is for travel meals only. So the coolest thing about this is that if you go on a business trip and you are getting meals, but you realize that you haven't spent as much on meals, Uncle Sam says that you can use the per diem for that particular city and state instead of your actual expenses. This is beneficial when the per diem is higher than what you have spent in actuality. An example, and don't quote me on these per diems because there's a lot of cities and a lot of states in the world. I don't know everybody's per diem off the top of my head, but I know where to go to get it. If you were coming to Dallas, Texas, that's where I live, and you were here for 3 days, your per diem on your first and your last day of travel is going to be a smaller amount, and then your full day of travel is going to be a higher amount. But let's say all of those 3 days that you were here totaled up in per diems to $200, but you only spent $50 on your tax return, you can write off $200. So get your tracker, look up those per diems, and that can be found on GSA, the GSA website. But you'll still deduct those things for tax purposes on Schedule C. Alrighty. So we're towards the end of this presentation here. I wanted to end it on with these myths and whatnot. As a CPA, I combat myths every day, all day. There's a lot of misinformation out there, a lot of half truths out there. So let's go through some of those right now, and hopefully you all will walk away more knowledgeable than you did coming here. Alrighty, so the first myth, LLCs save you taxes. Wrong. So, as I mentioned earlier, single member LLC and a sole proprietor, they file the exact same tax form, which is Schedule C. There is no difference between the two tax-wise. Now, an LLC owner has more protection when it comes to their limited liability. So if someone sues them, then whoever is suing them is only entitled to, what the LLC owns and can't touch the owner's personal assets. However, this brings me back to commingling funds out here in these streets. If you own an LLC and you are commingling funds out here in these streets, which is basically meaning you are not treating your business as business, the government is not going to treat you as a business as well. And they're going to say, hey, person suing the LLC owner will go out their personal assets as well because they out here playing. So if I was not clear before, I hope that I am crystal clear now. Stop commingling funds out here in these streets. Please get the separate business bank account, okay? Now, following up to this first myth, if you are an S corporation, which is an LLC who is elected to be taxed as an S corporation, then there is a difference in taxes between you and a sole proprietor. But you need to keep in mind that as an S corp, then you need to put yourself on payroll and you have to pay payroll taxes. So not all the time is an S corp going to be more favorable tax-wise than a regular LLC or sole proprietor. You have to do that calculation and see what's going to be best for you financially speaking. All right. So myth number 2, people are so happy to receive these large tax refunds out here. And you can tell people act real different when that money hits their bank account. But it's nothing to be proud of. As I mentioned here, that essentially means that you gave Uncle Sam all this extra money throughout the year, and then you had to wait on him to give it back to you. Wait until you filed your tax return before he gave it back to you. The way around this is to adjust whatever taxes are being withheld from you. If you have always received very large amounts of tax refunds, withhold less throughout the year so you can spend the money throughout the year, or just have the money throughout the year and won't have to wait on Sam to give it to you. So don't be excited about these large tax refunds. It's not a good thing. All right, red flags. People are so afraid to claim deductions on their tax returns because they keep researching that something is a red flag, red flag, red flag. No such thing. No such thing as like a red flag. If you are entitled to claim that deduction, but you must track whatever needs to be tracked in order to back up that deduction when Uncle Sam comes knocking on your door. If you have your documents and your paperwork in order, then there's nothing that you should be afraid of. It's when you don't have those things in order that you're going to be shaking in your boots, or Sam is going to walk away with more money if he comes to audit you. But set yourself up to be audit proof. Don't let Sam come and audit you and take any more money. We want him to walk away empty handed. All right. And the last myth here: loopholes are illegal. Not true. Loophole is a tax strategy. It is using the tax code to your benefit. Again, using the tax code, nothing outside of the tax code, using the code itself and doing exactly what it allows us to do. I don't want this to be confused with tax evasion, lying, or being fraudulent with in any type of way, which are actually very, very illegal. But using the code and doing what it allows you to do is not illegal. Again, if you have your ducks in a row, have your documentation to substantiate everything, then there's nothing for you to worry about. But alrighty, I just want to thank everybody for joining us this evening, taking time out of your day to sit and listen to me talk about tax and business. I'm going to open up the floor for questions in the last few minutes that we have here. Oh, and I like this comment real quick. Ray Elliott pierces the corporate veil. Absolutely. Absolutely. That's why I can't condone commingling out here in these streets.
Hey, listen, I think we're gonna probably have to get us a T-shirt to say "Don't commingle out here in these streets." That's
I
gonna
like
be that's gonna be the T-shirt for us. But really appreciate all of this valuable information. We have some heavy hitters in the room just following up, especially Ray, Double Who. Let me get that right. Who was chiming in. There was actually a question in the chat that came in earlier, so I want to get to some of the questions. If you're on business travel alone to professional conferences or trade shows, can you use the per diem?
Yes.
Okay. All right. I have a general question, broad, but at what point should you stop doing your own taxes?
I don't think you should ever start if you don't understand what you're doing.
Okay. Okay.
Um, if it's something that is stressing you out, you don't know how to put your business profit and loss statement into a form where it will flow smoothly into the Schedule C, at that point, you'll probably need some help. But it goes back to what I said earlier. Like our parents don't know much about taxes or money, so the information that we have been given is not good information. So for us to be doing our own taxes, like other than for someone who just works a regular W-2 job and has nothing else, like you can use TurboTax. I ain't gonna lie. You can just use TurboTax or whatever is out there, H&R Block, to file it yourself, because you don't have what's considered a complicated tax situation. But as a business owner, you might want to have someone do it for you so they can make sure that you're taking advantage of all of the deductions that are available to you. Because for me and my clients, all my clients know that when I'm filing your tax return, you can give me all the information that you got, but you're going to get an email from me with a whole bunch of clarifying questions, because I want to make sure that I am doing my due diligence to make sure that I can deduct legally whatever can be deducted for you.
Great. Thank you. Naya has another question about jurisdiction. Naya owns and operates an LLC in Virginia, but also has self-employed income as a graduate student in New Jersey. Which state taxes should she pay?
Some states have reciprocity. I don't know that Virginia and New Jersey have reciprocity, and what that basically means is that you can live in one state and work in the other, and then you don't have to pay taxes, state taxes for both of them. It's going to be an either or situation. Off the top of my head, Naya, I don't know, again, if those states have reciprocity, but that's something worth looking into. I ain't gonna lie to you on this webinar.
No, we appreciate you being honest because
Yeah.
I think kind of maybe the states reconcile it in the background, and it's probably common for states that are close by, like
Right. DC, Maryland, Virginia, all of those states have reciprocity. So that's where I lived for 11 years of my life before I just recently relocated to Dallas, Texas. I lived in Virginia, worked in Maryland, then moved to Maryland, was working in Maryland, but my company also had a DC address. It was weird, but I only ended up paying state income taxes in one state. But now that I live in the great state of Texas, I don't pay income tax.
see, it's some pros and cons to living in Texas, though. I guess
No,
that's one of the
it's
pros.
property tax. It's the property tax whole situation for another day.
Got it. Um, this is for the the people who be out there popping bottles or whatnot. I just thought about it. I was like, is alcohol deductible?
Yes.
Okay. So if
Yes.
you're out there and you want to show a potential client a good time, you want to get your ace of spades on or whatever, that is deductible.
Yes. It just cannot be lavish or extravagant. If you out here trying to buy a $2,000 bottle of whatever, I don't even know what bottles sell for that amount.
Oh,
That might be considered lavish or extravagant. But the thing is, and I can't say that, oh, you're never going to get audited. There's always a possibility of you getting audited, which is why I always err on the side of caution. But that's when those type of things would come out if Sam were to ever question, hey, I want to audit your tax return, show me the receipts for all of these transactions. Bam, $2,000 bottle of wine denied.
hmm so you want to make sure you stay in the Bel Air Rose section and not the Ace of Spades section.
Absolutely, just unless that is something that is not extravagant or lavish for your line of business. Like if you are a real estate agent in Beverly Hills or something, and that's just what y'all do, and that's a normal part of your business, then that's a normal part of your business. But as for me and mine, no, we not buying $2,000 bottles of anything for even ourselves. So there's that.
I hear you. All right. So you answered the per diem question. We're right at about time, and I want to be respectful of everybody's time. But any closing thoughts that you might have for us? Tell us about your business. How can people reach you? I want people to know how to get with you. Listen, I'm gonna tell y'all. Listen, I'm gonna just give a testimonial. You know, and listen, don't sleep. So I know that this app that I'm about to mention is kind of crazy now, but when it first started, it was cool. So I met Kia on Clubhouse, and I was like, I need a CPA. And then I did my little background check, and I found out that Kia was legit. And then I actually went in and I gave Kia like kind of the keys to the kingdom, and I was like, and Kia, I'm telling you, is tight, detail oriented, methodical, found money I didn't even know that Uncle Sam owed me. So you might be overpaying. And so, like, if you want to get somebody that's detail oriented, methodical, then Kia is certainly that person. I feel like it was not by accident. I feel like it was divine. I needed that. And I just want to give you the opportunity to, kind of talk about your business, tell people how they can reach you if they want to get in contact with you, and then we'll kind of wrap up for today.
Gotcha. Well, thank you so much. I have all the butterflies and good feelings going around here. But my contact information is on the screen here. I have an Instagram business page. It's at AVP Financials. There's also a Facebook page, AVP Financials. I also have a YouTube channel. Just a few videos up right now, but if you are a new business owner just starting off in this game, then each one of those 3 videos is going to be for you. So that YouTube channel is Avp Financials, and my website, avpfinancials.com. This is where you can go to book a consultation if you have questions. I do offer free 15-minute consultations for tax planning and preparation, business consulting and planning, and then also outsourced accounting. So, whatever questions you have, you can book one free consultation, and we'll be able to chat. But I'm so happy that we were able to sit here and have this conversation and just kind of share some knowledge. And I am looking forward to more questions. I love questions, so yeah, reach out.
All right. Well, thanks everybody. We're gonna be respectful of everyone's time. Thank you again, Akia, and hopefully we can do this again. I see we got Ray on the line, and Ray is a specialist in nonprofits and things of that nature. We're hoping to get some more people on here to kind of speak and bring more content through Vinegar Hill. But we're gonna have you back. Don't worry, because these people got these quarterly taxes they're about to mess up on, so we're gonna try to prevent that. So,
Another thing, yeah, quarterly estimated taxes. So I'll look forward to another webinar. So much to know and so much to do.
All right, everybody have a good night, and I don't know where you're going, but we shutting it down.
All right. Bye.
All right.